We are with the management of Raymond, and the Group CFO, Mr. Bahl, joins us to give us a perspective on the quarterly numbers. First of all, let me thank you, Mr. Bahl, and we have seen a strong revenue growth, and not only that, a strong expansion on the EBITDA margin front. If you could just give us a highlight of the third quarter and what were the key drivers for the margin expansion this time around.
Yeah, so very good set of numbers with top line growth of 13% across our group and EBITDA margin growth of 221 basis points, backed up by growth in net profit of 30%. So a very robust numbers, very happy with the quarter's performance. Really, this is underpinned by growth across our business segments, and if you see, the branded textile segment has grown 10% in revenue, and margins have been maintained. So there's been growth in margins, 26 basis points improvement in margins. Branded apparels has grown by 20%, garmenting has grown by 14% in revenue, and our engineering businesses continue their growth, strong growth of 30% in this quarter. So overall, 13% growth underpinned by a good performance across our business segments.
Okay, sir, and talking about the textile business, wherein we have seen raw material costs moving up. Do you think with the cotton crop expected to be lower than last year, we could have some further pressures on the margins for the textiles business?
So there are two cost pressures which impacted us in this quarter. Specifically, the wool price ruling firm. Okay. They've grown 20% year on year, and cotton prices where the MSPs have been recently announced, and with the output at an all-time low, prices are expected to rule firm. Okay. However, we did see this, and the businesses took preemptive action in terms of cost containment. And there is a lot of work which happened to ensure that we were able to manage our blends and product innovation very well, so that we were able to optimize our consumption efficiencies of our raw material, and that has resulted in offsetting a large part of the cost push that we got in wool, and also a marginal price increase with launch of products which were aimed at improving realizations, has really helped us to achieve our twin objective of revenue growth and maintaining a margin. The cotton prices have impacted the shirting business in terms of margins. Also, we believe that the wide range of products that we have in the shirting business will help us to offset this cost pressure that we are seeing in cotton. We are now we have our Amravati plant where we manufacture 4 million meters of linen. So we have launched high value linen as well, and plus other products. So these will help us to at least average out our costs. So.
Okay. So specifically talking about the garmenting business, in your investor presentation, you have mentioned the fact that you have seen good growth in Europe as well as US. If you could just give us, the segmental performance as to how do you see it moving ahead, and more importantly for the US and European markets, are you looking at some bit of slowdown which is happening in, or it is business as usual? And also, if you could update about your Ethiopian operations.
Yeah. So in garmenting, we work with very strong customer relationships with key brands, and those we expect will continue to strengthen as we go along. We also have set up a manufacturing base, garmenting base in Ethiopia, and we believe that we will be able to service our customers better and more cost effectively through Ethiopia, where our operating costs are much lower and more competitive as compared to the rest of the world. So we expect capacity utilizations to go up and improve gradually over the next few quarters in Ethiopia, and we expect this to be a strong sourcing base and securitize our business and relationships with our US and European customers. So overall, we expect garmenting sector to continue to do well and continue to improve in revenue growth and margins.
Okay. And Mr. Bahl, one final question regarding the real estate business. You announced to the stock exchanges that you shall be, developing the land, the 20-acre land parcel, and you have received the RERA registration also for the same. If you could tell us how really will things move up for the real estate segment, and do you expect any kind of a revenue to come in for FY20 with regards to your partnership with a real estate developer?
Okay, so I'm happy to report that we've secured all the approvals that we were waiting for the commencement of the development of the real estate parcel of land of 20 acres, for which we had got board approval in April 18. So we are now registered phase 1 of the project, which is really 2 towers of 42 floors each, 638 flats in total. So that is the phase 1 of the project, which we will be commencing to launch soon. I do expect that we, while the teams are working on it, we should be in a position to launch in quarter 4 this year. So for next year, surely the other details are being worked out, but yes, there will be a revenue contribution coming in from the real estate business. We expect sales velocity to be high in this project, so we do not expect our debt levels to go up as a result of launch of the project. We expect this to be cash flow positive in the first year to begin with, and then we will give further guidance based on the results of the launch that we see and the progress of the project. Okay. But the first year, clearly we see this project to be cash positive.
Okay. And Mr. Bahl, if you could clarify, you also informed to the stock exchanges regarding the SEBI's show cause notice. What is the progress on that? Have you been able to reply to SEBI with respect to this notice?
So we mentioned that these are largely technical and procedural matters that SEBI had referred to. We have our views on the right interpretation of these, and our lawyers are working on a suitable reply to SEBI, which we hope to be submitted very soon.
Okay. Thank you, Mr. Bahl, for speaking to Bloomberg Quint. So that was the management of Raymond. They expect a margin expansion spree to continue, and more importantly for the real estate business, Mr. Bahl expects that it will be cash flow positive from the first year after the project launch.